The impact of tariffs on public stock markets has been widely talked about on CNBC. We see it playing out in all the volatility at the index level as well as individual stocks. But what does all this mean for private markets and venture capital? Here to discuss, Cack Wilhelm, partner at IVP, and Pete Sonsini, partner and co-founder at Lod Ventures. Guys, it's great to have both of you here. Thank you.
Thank you for having us.
And we should say you guys co-invest. You're on a couple of boards together. So definitely overlap, but different stages of the investing cycle. So this will be great to get both of your perspectives. It's terrific to have you here. So as we said, we've seen all of this playing out in real time in public stock markets. Cack, maybe we'll start with you. What is the impact so far that you've seen in your day job and in private markets?
Yeah, Kate, I'd say juxtaposing public markets and privates, I'd say it's as austere as in private markets. It's a total non-impact.
Really?
A non-impact today. Now, I think that will change, I think, with DOGE and cost cutting and various other impacts. But for the most part, I mean, we're in a very long-term industry. Venture capital funds are 10-year funds, and the companies we invest in are on long time horizons. And so it's so far a non-impact.
That's so surprising, I think, to a lot of people because of a lot of the noise and the impact on prices and what we've just seen play out. Pete, is that your experience at the level you invest?
It is. And the thing is that AI is so dynamic right now. It's so changing and so unpredictable that like the entrepreneurs that we're used to investing with are kind of like trying to ride the waves of AI right now. So you don't even really like need to focus on overlaying the uncertainty with tariffs. It's like just focus on navigating the AI changes, and that's really what the focus is, which is different from focusing on tariffs. You just don't need to focus on that right now.
And Cack, are you getting questions from founders? I would think based on this, even if there's not a near-term impact, I would think the uncertainty and just all of this being in the news cycle would maybe ruffle some feathers.
Okay, I think you'd be surprised. I think COVID, for example, there was a lot more all hands on deck, like really liaisoning with founders and thinking about next steps. I think this time around, I think people's memories are short. And like Pete said, I think the thing that's right in front of founders right now is AI and how do you move faster. And the thing that's like very far from them is tariffs. And so I don't think if our founders are coming to them, it's not about tariffs. Excuse me, if our founders are coming to us, it's not about tariffs. I think if our founders are coming to us, it's about competitive pressures and how they can move faster, and that's more the conversations that we're having.
Yeah, I mean, unless we typically invest in software companies, and unless you're investing in something that is, a manufactured product like a AI, like doll or something that's built in China, then you probably should think about like other sources, because of tariffs. But we're mostly investing in software companies, and so there's not really the impact day to day from that.
And on that note, Pete, for software especially, I would think enterprise spending is probably a big question. We've got some of the big mega cap tech companies reporting this week. Is that something you guys watch as a potential impact? Maybe not kind of directly from tariffs, but as sort of a second order effect. If there is some sort of pullback in enterprise spending, how could that affect portfolio companies?
I mean, it's the same sort of thing with early stage investing that we do with Lod. It's really longer term trends, tech shifts, and really, navigating that and having the vision to really play that through. And so, spending is going to go up and down. There's always going to be economic, cycles. And with early stage investing, you typically don't focus on it. You're focused on getting product market fit. You're, navigating the AI, the technology changes, and knowing which markets to target, how to hire people, like winning that deal, as opposed to like broader GDP swings. With early stage investing in private markets in general, you're taking that longer view. You're just not as impacted by it.
I think about a company like Glean, for example, and Cack, if you want to add to that. But some of the companies that are sort of partnering and serving larger enterprises, what have you seen so far?
I mean, example I give you is like, look at ServiceNow last week earnings. I think the headline there was like brilliant execution overshadows, sort of this like soft market data where everyone is full of fear. So I do think the soft market data right now is maybe more dramatic than the cold hard facts. Like look at ServiceNow, and they actually had good earnings. And maybe that's from execution. Maybe that's because it's a software company and tariffs haven't impacted yet. So I would liken that to a Glean. Glean, software company, selling into big enterprise, and end of quarter is tomorrow. I don't know the numbers yet, but I expect, based on the signal I'm getting from our later stage enterprise companies, that there won't be material weakness in Q1.
That's fascinating.
Yeah.
Really interesting. Well, it's interesting too, the sort of the sentiment versus actually the hard data, which we're seeing in some of the macro numbers as well. And it seems like AI too. We had Brett Taylor in here last week talking about AI being sort of a different beast because you can probably justify that as also a cost-cutting measure if you're going to spend on AI. Has that been helpful, going out and talking to founders who are selling into these larger enterprises? Are they making that case, and is AI sort of immune from what we might see elsewhere? Pete, if you want to take that.
I mean, I think that in the boardroom, AI still is the priority for management teams to be focusing on and embracing to get efficiencies, and I don't think that's going to change anytime soon. I think that most people get it. They're using these tools to, ask questions of Perplexity for things that they want to know about. They're starting to use, some of the agent tools to get things done. People see it. Like, even though, the numbers are really kind of going up to the right, but I think day to day people are using AI. And so in the boardrooms, people are saying, what's the plan? What's the plan? I don't think there's going to be any impact on that for a very long time. I think people see that this is the future. You need to embrace AI. You need to have a plan to do that.
What are you seeing, Cack?
I mean, take a really concrete example. So down the street right now, RSA conference is going on, so big cybersecurity conference. On Sunday night, IVP hosted a dinner with the CISOs of 3 big public companies. It was off record. All 3 of them, when asked about their budgets for security, said that AI came first. So I think they're finding that their budget that's allocated to them for this year is slightly shrunken because the priorities of the company writ large is like AI first, and it's not so much that security second, but it's just like we have to make space for AI. So I think Brett is probably onto something with the AI tailwinds.
That's a great point. You guys mentioned Perplexity, so you're both on the board, is that correct?
We are, yeah.
So interesting, this week, OpenAI had an announcement where they're going to enable shopping through ChatGPT. Perplexity has gone in that direction. What do you think that signals maybe about consumer behavior and sort of this change we're seeing where it's not just chatbots? And I think the shopping topic is fascinating. Pete, if you want to share your thoughts on that one.
The agent thing is kind of the next wave, this reasoning, the next wave of AI beyond the pre-training innovations is a really big deal. And we've seen that, in the companies we're involved with. And so, yeah, I mean, I think that people are going to be using agents a lot going forward, and it will very much be a material part of, Perplexity's strategy.
I mean, if you think about what's the reason to exist for Perplexity? The reason to exist is share knowledge with the world. We want to share knowledge with the world, and the reason that people are seeking knowledge is often because they want to do something with that knowledge, right? I don't want to just have the knowledge to have it. I might want to have it to share it or do something, take some action. And so I think where Pete's going with this sort of like agent idea is, what if, tying to your idea of shopping, is like, I'm looking for the brown boots because I want to buy them.
Yeah.
And if I want to buy them, I want to do that with minimal friction, fewest clicks, and have them arrive at my door the soonest. So I think it's very logical that Perplexity first, and sounds like OpenAI second, is moving in this direction, right? How can I fulfill the action to the furthest point possible with the least friction on behalf of the user? And that is that's the goal.
What does that look like on the back end, on the revenue side? Because it's looked a little bit different. I know Perplexity's also moved into advertising. It's different than a Google ad model, which consumers seem to really like. How are you thinking about that from sort of the money-making perspective on the board?
I'm just thinking about without saying anything we're not allowed to say.
I mean, yeah.
That's fair.
Go.
Well, I mean, what I'm going to say is that we're seeing with all these companies that it's changing the way they're doing business. It's changing the way they're delivering value. So it's going to change the way that they charge consumers. And if you look at, some of the things you can do with Perplexity, they are, as effective as an independent consultant could produce for you. So what is that worth? It's worth a lot more than hundreds of dollars per month. And if you start to break things down, how they're charged, and look at it really first principles, the value you're giving, the work that you're saving, what you can charge for this stuff is very different, in some cases very high, but very justified. And that's how this agent is changing, delivering value, and it will change pricing. Adding advertisements, I mean, it remains to be seen.
Yeah.
Obviously, free models need to be supported through something, and advertising is a sensible way to charge for it. And I'm sure there's ads in there with these foundation models as a service, and Perplexity probably included. But like I said, it's very dynamic. It's changing every day, and we'll take it day by day.
And Cack, what do you see? I don't mean to make you speak up.
Yeah, no,
if there's anything that's not public yet.
I mean, I think with this whole like deep reasoning and all of that, I think one of my big realizations in the last 2 years is just people are actually willing to pay for AI.
Yeah.
So if your question is sort of like, the question behind the question is like, how's Perplexity gonna make money over time? Like obviously they charge for pro subscription. That's very consumer centric. I think all of these AI companies are gonna go enterprise over time. Enterprise is a distribution channel. And we can talk more about sort of like Google and antitrust, and because I think that relates to this too, distribution. And then very logically, Perplexity started with a niche which was knowledge workers, and that's a very high value customer base. It's a very high value customer base for Google to lose. It's a very high value customer base for Perplexity to have. And I think their theory is like there are just going to be degrees of freedom. Like they'll continue to do consumer, prosumer. It's not unreasonable to think you would do ads. I mean, there are plenty of affiliate revenue streams over time. I think all the players will kind of like try all the things and maybe do all the things over time.
Anecdotally, I feel like I hear this a lot. My own search behavior has changed. Are you seeing evidence that a Perplexity is taking market share from Google?
Yeah, I mean, I think Q4 was the
sure.
first time that Google search share dropped below 90%, and that was the first time since 2015. So I think you're starting to see it in the facts. And I think you're starting to see it in some of the softer things, like the emphasis on enterprise and the Wiz acquisition on the Google enterprise side versus the Google consumer side. Now, on record, like I do think we can be pro Google and pro Perplexity at the same time. I'm not sure that they're mutually exclusive, and I think both. Google has many streams of revenue, and Perplexity's like one part of it.
Yeah.
I mean, a lot of people are using Perplexity. It's growing really, really fast. People love the product. They use it for questions. They use it for some search, and so I don't know what the numbers say, but I just know that they are cranking out an amazing new product that people are using to get answers and to consume knowledge. And so, what does that mean? It means they're probably eating into some share. I mean, maybe the pie is expanding. I don't know. We don't really worry about it.
Yeah.
We worry about cranking out new products, delivering value, having a good business model, doing it effectively, and that company's doing all of those things. And so, that's what you focus on.
And I think shipping product voraciously. Like I do think, and we can talk about technical founders and why we like them and love them and why we loved Arvind, both of us individually. But one of the things that stand out with Arvind, with Perplexity, is just the rate at which they ship product. Yeah. And I think that then the derivatives of that underlying is a super operationally sound team, like a very customer-centric orientation, a killer engineering team. Like all these things have to be true in order to get product out really quickly.
I want to ask you about what you guys look for founders, but while we're talking about Perplexity, the moat discussion, how important is it right now to have a moat? Does that exist in AI? How are you thinking about that?
Yeah, totally. So they have a moat for sure.
What is the moat?
The moat is that, for one, they've invested in ways to embrace the latest AI technology super quickly and roll it out. They're just not built on top of OpenAI with some API call. They've invested in the infrastructure to embrace new models quickly, whether they're from China or from wherever. Use the best thing for the best task, and they've invested in that infrastructure, which is very differentiated, and it's allows them to do these amazing things and do it very cost effectively. So that's a big moat. They're starting to use their own index to answer questions. They're not relying on a separate index. And when I first met with Arvind, 2.5 years ago, he talked about he was going to eventually have his own index. He was not going to need to call on Bing or Google. And we kind of said, really? And he's like, yeah, I think I have a way to do it. And here just in our last board meeting, he talked about how 90% of his queries are using their own index now. And I told him, I said, dude, you said that 2.5 years ago. I can't believe you did it. He's like, I know, I can't believe I did it too. Wow. But he's doing it. Yeah. So, that's being able to use their own data. That's a moat. Obviously, you get velocity of adoption. You can introduce new products to new users. You get breakout velocity, it's a moat, unless you screw something up. So there's 3 things right there, and there's a lot more, that I probably shouldn't talk about.
Yeah.
But, You
Fair
get the point.
enough.
I mean, I think they have an end user, they have an end product with it consumers love. And I think it's as simple as that. And the other thing I'll say is I think 2 years ago, everybody was wrong, right? When you invested, when I invested, everyone thought Perplexity was a wrapper. And the suggestion was that was a very dismissive comment of only a wrapper. And I think what people are realizing is by Perplexity being a wrapper, it means that they've completely commoditized the model layer. They can swap in, swap out, whatever's cheapest, best fit for the job. And they went product first, model second, because they're building models now. And I think everyone that went model first is wishing they had built a product sooner.
That's fascinating. The commodity question, I feel like, has come up a lot in the past couple of years. But I guess looking back, in hindsight, these are sort of becoming commodities, is what you're saying.
I mean, what's a commodity? Commodity is like I can swap it in, swap it out, and get the same result. With Perplexity, you can swap in. I mean, you, as a consumer, end user choice, I can choose between Sonar and Grok and et cetera, and I can get a variation of the same result. I can have a no different experience. And they, so they've rendered themselves very powerful they have a lot of leverage, right, over the model providers, because Anthropic, et cetera, get paid by Perplexity when Perplexity serves their model. So we actually have more power than you would think, having been just a model. Excuse me, just a wrapper.
Just a wrapper. What about for the large language model companies? I would think, maybe, as you said, Perplexity is in a good position now. I would think it also adds pressure for them to sort of match what a Perplexity is doing and to ship their own products. What are you seeing from the Anthropics and OpenAIs of the world in terms of competitive pressure of trying to really be a wrapper at this point and move down sort of the app avenue? Yeah,
I mean, it's a race to the bottom with a lot of these LLM as a service companies. It's they're going to get big and they're going to grow fast, but it's going to be it's commoditized. It's going to be a race to the bottom. So you need to deliver shareholder returns. You have to eventually turn a profit. Eventually, I mean, we don't know when exactly. The private capital keeps on flowing into these companies. At some point, it's going to stop, and you have to have a good business model. So you look at things like what I talked about earlier about charging for work, and where do you make the money beyond just an ad model? And there's a lot. Fortunately, there's lots of ways to win and develop new product and deliver value. And so they have to move to this area. That's why you see the shopping thing, even though they're not charging for it. You see the operator stuff. All the talk about agents. I think they said 25 billion of their 125 would be for agents. So they're going to have to do that. But just an API call for an LLM, I think is going to be pretty commoditized. I mean, a lot of people will be using their own open source models where you can host it yourself. You're not even going to pay anything for that. So that's how the market has to go. That's how those guys have to go.
Is it too soon to be talking about exits? I know you guys have such a long-term investing horizon, at least compared to what we talked about with public markets. But what does the exit ramp look like these days for a Perplexity or one of these massive AI companies? And are the strategic buyers, potential buyers, not going to be able to step in because of the FTC? What is it looking like on the back end?
I mean, I'd shift the question slightly. I'm very optimistic M&A. I mean, if you just round up and some, MoveWorks, Wiz, Protect AI announced yesterday. There are a few more that I'm missing. Just in the past, month, I think there's been 30 billion in M&A in the past month. Now, not all of it has closed, but I'd say I'm optimistic on the 5 in mind. So I think we're starting to see that. I think we're starting to see that for sure. I think, yes, one of them being OpenAI buying Windsurf. Buying Codium. I think that's a great example, actually. That's both an AI company and, relatively at scale, very logical acquisition. I think it ties to what you were just saying, which is the model providers are going to want to own end user applications, aka coding via Codium. So I think we'll continue to see more of that. Yes, I think antitrust might temper the enthusiasm for some of the big acquirers, just anticipating the friction that might be required to overcome to get some of these things done. But Arvind Srinivas doesn't want to get acquired. Arvind Srinivas wants to go public. And I think that's probably true for OpenAI and Anthropic and lots of these other companies. So it's probably not a limiter at the moment.
Would he be a buyer? Would Perplexity be a buyer of some of the smaller AI companies?
Sure, yeah.
Yeah,
they have
been.
What about TikTok? There was some talk about buying, maybe putting their hat in the ring at least around the TikTok conversation. Pete? Anything?
I mean, I think
ongoing fluid situation.
Yeah, exactly. I mean, I think that there's really big ambitions for this company, Perplexity, and Arvind. We all stand by him with those big ambitions, and a lot of different stuff's on the table, and and we encourage him to continue to use his creativity to, exploit the dynamic in the market. I mean, you have to understand, he was early employee at OpenAI. I mean, he's a brilliant researcher, but he was front row seat at OpenAI before he started this company, and that early insight really gives him, a lot of ability to execute, before he sees stuff before other people does, and the things they're doing now, the best AI companies will be doing some of the things that they're doing now, and it'll be like, the pioneers that everybody needs to follow, and he's a pioneer, and so, he's going to continue to be a pioneer and see things before a lot of other people, and if that involves companies like that or stuff that maybe you wouldn't even think of, be ready for it, because who knows what he's seeing.
What about IPOs as we talk about the exit ramp? So, Cack, you were close to, is it Klarna you were an investor in as well?
Yeah, Klarna, Figma.
Figma, okay. So you've sort of had a front row seat to this.
Yeah.
Companies pulling their IPOs. Do you expect that window to open at any point soon?
I do. I think memories are short. We can't go 4 years without IPOs. So if you take that to its logical end and work backward, I think that the window has to be open at some point, probably sooner rather than later. I also think IPO preparedness is a long-term thing. So any company that is in the process of preparing should continue to be in the process of preparing, because you never know. And I think if the new normal is stocks go up 7% one day and down 7% the next day, like if that's the new normal, we'll adjust to the new normal. Hopefully go public on a day when they're up 7%.
Yeah, exactly. I know it's been so volatile lately. Pete, you're at the earlier stage, but also close to Databricks, later stage company. How are you thinking about the IPO window?
Yeah, we're so far away from the IPO window with the investments we're making right now, so I don't think it too much, but obviously I'm very close to Databricks, and those guys, they've made amazing decisions as a founding team with pretty much, so many different things, and the decision they make around going public will be the right decision when they make it, and we all stand by, the management team, and they'll do, they'll go public when it's the right thing for them to do, and that's the right answer.
And in terms of raising money as a venture capital firm, I think about all of the scrutiny that's been on Harvard, some of the Ivy League schools, and I don't know if those are any of your LPs, but just for private markets in general, that's where a lot of the capital comes from. How are you thinking about the potential hit if these companies, lose their nonprofit status and some of this plays out the way it seems to be going? What impact would that have on venture capital?
Yeah, I'd say we have a fair amount of resolve. I think IVP's been around 40 some odd years. I mean, Pete worked at a firm that had been around for 40 some odd years, starting a first fund now, but with the sort of legacy heritage. I mean, endowments represent one pocket of probably like 8 or 10 categories of pockets of money for investors. We're early in investing out of our current fund, Fund 18, as you guys are out of Fund 1. Might we have to shift allocation slightly away from endowments in favor of something else? Absolutely, but I think it's fairly dynamic. And the cardinal sin with venture capital from an LP perspective is to miss a vintage. And so LPs over the years, you can't predict which is going to be the great vintage, so the best solution is invest in every single one, and I think that will remain true.
What has it been like? You closed the fund at the end of last year. What was that experience like, going from a firm that had been around for 40 years to this sort of, you're in founder mode now, you're at a startup?
Yeah, it's great. I mean, I love working with the entrepreneurs. I love focusing on early stage investing, and that's mostly what we do. That's what we do. It's just working with the teams, helping them. I like to add value and help out, and I have a lot of experience where I can help these entrepreneurs. Fundraising, it is what it is. It is what it is. We got it done, and I've been in this business for a while, so I had a stack of kind of things I could point to that I had done that made it easier than if I was brand new getting in the business. So, but we've got great LPs. I'm eager to make them a lot of money and invest in some great companies along the way. But on the academic thing, it's really about the research and the funding for the research, and so many great companies come out of academic research. I mean, so many impactful companies on Google, I mean VMware, like there's the list. It's kind of like the biggest target as a venture capitalist are research type companies, and
well, even
some of these
Databricks,
companies,
I mean PhD funding.
yeah, sure, absolutely.
Berkeley.
So like, I mean, you don't want to cut too much funding for companies that change like American competitiveness, and so I just more look at it from that lens. I mean, whether the endowments are a smaller portion of the venture capital business, if you have good returns, you're going to have like Cack does, you're going to have great LPs, and so I just look at it more from that.
That's a great point too. Some of the Doge cutting, which again probably remains to be seen the impacts, but the long-term impacts, right, of all of these PhD programs, especially in AI. It seems like a lot of the really successful founders were PhDs and came out of these successful
for sure,
academic
for sure,
yeah.
1,000%. 1,000%. That's
like
where
your
most of them.
model.
That's why our positioning are to invest in the deeply technical founders,
sure.
the researchy type founders, because they, those that have the vision and have the talent and have chipped away at the hardest problems generally can do amazing things with new companies. So.
What are the opportunities outside of AI? We talked a lot about it, but is it sort of a have and have-nots in venture capital right now? Are you seeing opportunity that's not AI related?
I'm spending as much time not on AI as I am on AI. I don't know about you, but Databricks I would put in the non-AI category, at least at inception. More of an infrastructure company. So I'm spending tons of time on just core infrastructure, security. I mean, lots of companies are utilizing AI as they should, but they don't posture as AI companies. And I think a lot of that foundational tech is equally as interesting.
What about you, Pete?
Yeah, I mean, I talked about how Perplexity invested in the infrastructure to run the models, and that's a lot of tooling and development and software libraries and coding that they have come up with, and that's opportunities for new companies to build new product, and so it really has shaken up the whole landscape if you look at it in that lens, and so that's new companies in data pipelines or security or orchestration or whatever in and around the actual core model itself. So. And we saw that with Databricks. It's like, they were making very little money off the model AI part of it, and it was all around the data processing infrastructure, ETL, and that's going to continue. The innovations at the model layer will, we unpack that a little bit, but all the surrounding technology for people to embrace this will always be there. It's not going to all go to OpenAI, or there's going to be a lot of venture capital lost. A lot of depressed venture capitalists if that's where the world is going, so it's not going to go that way.
What are you seeing in this cohort of companies in terms of their own profitability, or if they're more lean using AI? We talked about it from an investment standpoint, but I would think it's probably a tailwind for your other portfolio companies.
Yeah, absolutely. And I actually think the new crop of founders are more different than similar from sort of the crop before. I think nowadays, responding to market dynamics, but teams are smaller. Right, Perplexity's 200 people. If they were built in 2020 or 21, it probably would be 1,000 people at this point. Same with Glean, leaner headcount. So teams are smaller. I think founders are hiring more ex-founders, like a more sort of like nimble polymath personality versus the like tried and true sales executive or recruiting executive or whatever it may be. And as far as cost cutting and sort of like how is it impacting bottom line, I think you're seeing it mostly in headcount in these earlier companies. I think you hear more noise about it with like Klarna's and such of going public and what are they offloading onto AI versus people. But earlier stages, I think it's all team. Yeah.
Is that thanks to vibe coding and being able to use AI for engineering? It seems like that's where a lot of efficiency might be coming from.
It's for sure that like you can crank out applications, without necessarily, you can just use prompts to crank, to do stuff, and so and you mentioned Perplexity. What they've done with 200 people is, amazing, and there's a bunch of other companies like that. So certainly coding, but you're going to see it in go-to-market, selling, engagements as well. It's really, that's changed. That's going to change how you engage customers and the tools that you use. You talked, Brett was here the other day and what they're doing. So I mean, it's not just the coding. That's the obvious thing that people talk about because you see the growth of these companies. But the different areas as well, and it will lead to efficiencies. I mean, you talk to Arvind about how he's building his company, and he is like throwing out any advice he's ever gotten. He's just looking at what he can do with, what he's got, and it's amazing. Like, he's not focused on, I mean, he's treating employees well. The guy's a leader. He's and I remember when we first invested, he was very sensitive about Johnny and Dennis and treating them well. Like, he's a stealth leader for sure, but like, the way he's approaching building the company is like really throwing out all the rules. And that is the right way to do it, because everything is different. And so that's how you can get to, well over 100 million in ARR with 200 person company. And so. Yeah.
I mean, I think that is the superpower of like an Arvind at Perplexity, or Ali, or Shiv at a Bridge, or Arvind Jain at Glean, et cetera, et cetera. I mean, they're all very clever. I think their mindset is more lean and mean. Like, we can actually do more with less because we have less friction in the system, less hierarchy. Yeah. And then I think there is it's like a brash boldness. Like, they all have the ability to go rogue, like in a good way. That was probably less present 5 years ago. I think that's very present in a founder today.
Was that more present 10 years ago? Like, I think of the most successful founders, and that seems to be a hallmark of a really great founder. Did it go away? Was it just dormant for a little bit?
Well, I think the 2020 low interest rate environment prioritized different things, right? It prioritized having a lot of capital, and when you have a lot of capital, I think you're inclined to spend a lot of capital. And when you spend a lot of capital, I mean, every single one of those founders would tell you they got big too quickly and wasted a lot of money on unnecessary things. And so, yeah, I think those founders might have been pulled in a slightly different direction, and I like the direction that the current crop of founders are being pulled.
What have you seen, Pete, from where you sit?
Yeah, you mean in terms of just management of companies,
and
the CEOs, the personalities?
Yeah,
well, I mean, I kind of painted a picture of Arvind. The other one who I'm very close, I'm close to a lot of them, but I'm, Ali is like an N of one. I mean, he is just, his ability to like be humble, but also confident at the same time, and open-minded, yet also very definitive, is, it's amazing. So it's brash, but he's humble, and like, it's kind of a funny balance, and he's on a very personal level when he needs to be. I mean, he's executed obviously really well. So
that's an understatement.
So it's. I think Ali is a good model to follow. Yeah. And Arvind is a good model to follow, and they're both people with research roots, and they're both people who had visions, and they've executed on the vision in a way, and they've also been, open-minded about how to attack the situation and not just doing it from the textbooks, even though I know Ali reads a lot of textbooks.
Yeah, and Arvind reads a lot of books too.
So, two case studies right there.
That's great. Yeah, and running Databricks in a lot of ways like a public company.
Definitely. Yeah.
Fascinating stuff, guys. Well, we'll leave it there. There's so much that we got through, so I appreciate your perspective on all of this. Cack, Pete, great to see you both.
Thank you.
Thanks for having us.
Thanks.